What a great question. How do you protect yourself trading options overnight? I've made a lot of money trading options directionally, meaning if I have a signal that says the market's going up, I'll buy a call. And if the signal says the market's going down, I'll buy a put. And I've made a lot of money. The thing is, I've also lost a lot of money. And there's a lot of emotion around this. The highest highs and the lowest lows, and I'm trying to avoid this. So I want to start to protect myself overnight. What do I do? Well, I use SPY T trades. SPY T trades are really not that complicated. We call them SPY T for SPY, S-P-Y, the S&P 500, T for tomorrow, because a lot of our trades are overnight swing trades. And there are three parts to these trades. One, that overnight swing trade, and then a 2-to-1 option ratio. Most of the time, I'll give you a few options, and then we use a specific signal. Now I have videos on different signals that we can use. We of course use the SPY Tomorrow signal over at spytomorrow.com. I'm going to show you a few SPY T strategies, but I'm also going to show you a study of the results of using each one of these strategies. You don't want to miss that. So obviously we know directional, by the call, by the put. Now you could protect yourself overnight with what we refer to as a straddle. Now that's not a SPY T trade, that's a straddle. It means you buy one call and one put at the same strike price and the same expiration. However, there are a few ways you can go about a SPY T that can help you when you think you know the direction the market's gonna go. You wanna get a maximum gain from that, but you still want the protection on the downside just in case everything goes wrong. Now the first one is the SPY TA, which is the most aggressive out of all of these trades. There's a call option and a put option, which is like a straddle, but then you have another option going the direction your signal is pointing for the next day's market. I did really well using the SPY TA over the summer, and my signal was about 75, 80, sometimes 85% correct. And it worked really well until I hit September. September wasn't as good. September was about 60% correct, which is certainly much better than 50% correct, but the SPY TA was not as profitable. So I started looking for a few other options to consider, and now we have the SPY TB, C, and D, and the SPY TS, which is my favorite. I'll get to that in a moment. For the SPY TB, assuming that your indicator says up, which is the case in all of these examples, you would buy a call just in the money, and then a put out of the money about 50% of the value of your call. For the SPY TC, you go a little deeper into the money, and you match your call with a put at the same strike price that is equal to about half the value of your call. The SPY TD is one that I was not much in favor of for a while, but once I did that study, I noticed it was better than I thought. Wait till you see. What you do is you buy a call just out of the money and then find a put about half price. Very similar to the other systems, except both the call and the put are out of the money, which means it's less expensive, but it is more volatile. Now, if you're not up for the big ups and downs, I might recommend the SPY TS. It's one that I use quite a bit, especially when I'm unsure of my indicator. Maybe the confidence level of my indicator is not real high. So what I'll do is I'll buy a call just in the money and then a put, 2 strikes out of the money. Last night, the SPY Tomorrow indicator was neutral, yet because members can see which direction the algorithms are pointing, 2 of the algorithms pointed down. So I pointed my trade down. However, there was a ton of good news in the morning and the market opened way up. But guess what? I still made money, about 23% on my trade, because I used a SPY TS leveraging both directions. Now, if the market went down, I most certainly would have made a lot more. Now let's take a look at the results of these strategies. This is a study that I created using data from 21 days from September through November. And it's actually very representative of the time. The first half, especially in September and even early October, were very bearish. And after that, getting into the second half of October and into November, was very bullish. So it was a good representation of different time frames in which you would use these different strategies. Now, there's one element I'm going to share with you when I'm done with this part of the presentation that I think you'll find rather interesting. But first, let's get through the details. Now, I have directional, the straddle. Now, neither of these are SPY T trades specifically, but are options that you could use with the data provided at spytomorrow.com. But when we get into the SPY T trades, here's the SPY TA, the B, C, D, and S. One important thing to note is that the data is taken at a specific period of time, near the end of the trading day, at the last seconds, and right at the beginning of the trading day, usually within the first 5 minutes. However, this scenario doesn't account for the movement of the market. For example, the market could open a little lower and then become positive within the first 5 minutes, but this study does not take that into account. It's just straight buying at the close and selling at the open. Another thing to note here, which really doesn't represent fully real-world scenarios, is the fact that I'm just using the percentages. As you can see, we start with $1,000 and we reinvest the entire amount for each trade. So for example, we start with $1,000. Here's the buy, here's the sell. The buy does not represent $1,000. However, it does represent a 26% loss, which is then applied to the $1,000. Each one of these trades assumes that the signal is up. So all 21 of these trades assumes the signal is up. And as you can see by the middle of this study, directional has lost well over 97% of its value. The straddle, on the other hand, did very well. It was up over 50%, almost 60%. SPY TA was down 60%. SPY TB was down about 5%. SPY TC was also down, as well as SPY TD, 10%. And SPY TS, well, look at that, is up over 30%. Now, this is going through a very bearish market. Now, after that brutal market, everything started looking a lot better. And as you can see, the directional went up quite a bit. And we'll see how much that is in a few moments when I go through this yellow line and replace these numbers with $1,000. And we can see how it did in a strong bull market. But as you can see here, through the ups and downs, directional still lost 77% of its value. The straddle made 100% because it didn't do as well during the bull market. The SPY TA was about break even, but still made 4% over a month's time. The SPY TB, almost 150%. SPY TC didn't perform as well as I thought it might at 67%. SPY TD, which is much more aggressive than the other SPY T trades, was up almost 200%. And SPY TS was up 126%. Now, what I want you to notice here is that the SPY TS was rather stable throughout the process. Yes, there were wins and losses. However, only in the beginning days was our principal below 1,000. In other words, SPY TS, and the reason I call it S, is for stable. Out of all of the SPY T trades, it's the most stable. Now let's take a look and see what happens if we replace that yellow line with $1,000. And as you can see, directional, well, it did really well. It went up about 750%, which is why directional is so attractive. But as you can see, if you're going through some down days, it can be really rough. Now the straddle overall was up 100%, but through the bull market, it was only up 26% because the volatility really helped the straddle in the down market, which is something to consider. The SPY TA also did very well during the bull market. SPY TB did extremely well. SPY TC was up over 100%. SPY TD was up over 200%. And SPY TS was up 71%. SPY TD has greater swings, but it seems to be the winner out of all of them. So if you are okay with high volatility along the way, SPY TD is not a bad way to go. If you are looking for more stability, SPY TS is probably your best bet. One important thing I didn't tell you while showing you that study is that during those 21 days, the market opened up only 10 times out of the 21, which means if you were using an indicator that said the market would be up all 21 of those days, it was wrong over 50% of the time. It was only right about 47% of the time. Yet, those SPY T trades were all extremely profitable. Hey, have you tried a SPY T trade? Let me know in the comments below, and I'll see you in the next video.